Hi guys. I wanted to share with you a clip from a podcast called The Compound and Friends, where the hosts Josh and Michael interview Nick Colas of DataTrek Research, a veteran banker with decades of experience trading auto names, investing in them, advising clients about the sector, handling acquisitions, mergers, and IPOs of auto manufacturers and related businesses like their suppliers, and this is both stateside and abroad. He lives and breathes this industry, and one time saying he would trade the big three during the day and go home and trade the Japanese auto stocks at night just because he was so obsessed. He saw the fall of the American auto industry in the 80s and 90s as then newcomer Japan overtook our domestic offerings with their quality and their value. With that introduction, this clip shows that this OG trader has the intelligence, flexibility, and objectivity to see the potential in Tesla, and he speaks to how only Tesla and Toyota will survive this transition from ICE to EV to autonomy. Also, he addresses why the legacy auto manufacturers won't be among those survivors. Let's listen.
The share price goes through the ringer. Okay. Can we talk about Tesla?
Yeah.
Okay. What has the year been like as a Tesla shareholder? It seems like it's been somewhat frustrating. And we all know that the whole Twitter thing has been somewhat of a distraction, although it hasn't really affected Tesla's ability to deliver. But the stock price is kind of all over the place.
It is.
Okay. What's your take on what's happening there? Because that is now a very important stock to the indexes as well.
Yeah. So I think of Tesla. I think of Tesla in kind of a duality with Apple, and there are two different types of companies. Apple is a sustaining innovator, like we were talking about. They constantly improve new products by a little, and this is the Clayton Christensen model of disruption. He calls those sustaining innovators. They just keep trying to move up the value chain, charge a little bit more, create new things, but they don't create new. Tesla is the paragon of new. And you know it from the valuation.
Like revolution, not evolution.
Yes.
Okay.
Exactly. And Tesla's valuation is like $800 billion. So let's just say that we only know that two car companies will survive over the next 20 years. Toyota and Tesla.
Seriously? We all know that?
Yeah.
Is that consensus? Is that why Ford and GM sell at 5 times earnings?
Yes. I did a video on this, and I got a call from somebody I had known for a while, but then lost touch with, who's now a senior guy at Stellantis.
Okay.
This is Chrysler and...
Yeah, was he like, Nick, can you stop?
No, he said, why is my stock trade for a 3 PE? And I said, because the market...
You ain't Elon Musk, son.
Because the market thinks you're going to be dead in 10 years.
Yeah.
That's the sum total. Same with Ford, same with GM.
Yeah.
That's why you have those... I mean, look, when I covered the group, it was 10 to 12 times in earnings.
Yeah.
Now it's 5.
But you're saying you think that's right. You think the market is right.
I think the market's more right than wrong. So the thing about those two comps is Toyota trades for, call it 200, 250, 300 market cap.
Outselling Tesla in units by a lot.
And Tesla trades for 8. So there's a gap of 500. So why does the market give Tesla a $500 billion premium to the best car company in the world? Tweets?
No, brand though.
Because they think they're going to be around.
Yeah.
And because of autonomous driving.
Okay. And none of the other companies are going to adopt the same technology that Tesla does?
Look at what happened with charging, right? Tesla developed a charging system.
They won that war.
And they won that war.
They beat the government, right? I think the federal government wanted a certain standard.
Yeah.
And now it's going to be Teslas instead.
Right. So imagine that as a little tiny slice of a story and then put AV technology on top of it. Same kind of thing. So you have Apple being sustaining, Tesla being disruptive. And I always chart like how's Tesla doing over 50 days versus Apple. And the peak for Tesla relative to Apple was end of July, right at the peak of the S&P.
Wait, is there a world where GM and Ford write down their investments in their own self-driving and just adopt FSD from Tesla?
If they can't develop it, sure.
Well, I mean, it's conceivable.
Absolutely.
Okay. So that is why those stocks are being so severely discounted, is that there's like, at this point, survival risk. How does that square with GM having to negotiate with the union every 2 or 3 years? And I mean, it's because Tesla doesn't have to do that. So is it just innovation, or is it just like, look at all the natural advantages this newer company has versus the incumbents? It's got to be a part of it, right?
It's definitely a part of it. Like I used to go to Solidarity House in Detroit, UAW headquarters, when I was an auto analyst. And it's a different world there. And that's the world that GM and Ford and Chrysler have to interface with. Still.
Forever.
I think there's going to be a strike.
They also have to deal with the dealerships.
Yes.
Which is a whole other can of worms that Tesla's not dealing with.
Look, if you do like a classic Porter analysis of the car companies, they have pressure from every single part of the Porter square: suppliers, customers, dealers, substitutes, competitors.
Well, now
It's
Elon's putting
amazing.
more pressure on them. So I'll be curious to hear your take on the rapid price cuts. The Model S started the year at $105,000. Now it's down to $75,000. I mean, dramatic price cuts on the S and the X. Is this genius, or is this because there's a lack of demand? In other words, is Elon crowding out potential competitors?
He is, because a piece of that 250 of Tesla of Toyota valuation in Tesla comes down to staying alive. You have to be relevant. You have to continue to hold your market share, because if the next phase of the game is autonomous, you have to be there at the end of EVs to get to autonomous. So he has to maintain and grow market share.
So does this signal this? So this does not signal desperation, lack of demand. This signals
No.
he's playing from a position of strength.
He is. Look, the auto industry globally is one of the most horribly structured industries I have ever seen.
Yeah.
Because literally everything that can go wrong with an industry goes wrong.
Yeah.
Mostly overcapacity. I mean, the global auto industry has capacity for 40% more cars than there is demand.
Is that right?
Yeah.
Okay. And partly they're a victim of their own success. They've made the car, as we were talking about before, they've made it so that the cars last longer.
Yes. So your scrappage rates go down, and so your replacement rates go down.
Right.
John, can we chart on, please, to Nick's point? This is from Drew Dixon, who is a value investor. He likes to talk about Tesla. Okay, he said, in these now famous charts comparing Tesla's fundamentals and market cap to other automakers, I have excluded BYD for long enough. Well, I don't even know, what's BYD?
The
China.
Chinese battery electric car maker.
The Buffett stock.
So
He sold it, right? Buffett. I think Berkshire sold out of it, but yeah. Okay.
So we're looking at automaker market caps in one chart, and Tesla is now market cap wise as large as Toyota, BYD, Porsche, Mercedes, BMW, Volkswagen, Honda, Ferrari, Stellantis, and GM. The next chart is revenue. And I don't know, is that in trillions? What is that? 1.7, whatever it is. All of these companies are like, I don't know, 10x of Tesla, and they're the same market cap.
Yep. Dead, alive.
That's simple.
Yeah.
Can I ask you a question?
Wait, hold on. When you say dead, like
Yeah,
literally,
that's what I want. Like bankruptcy dead, or just like moribund businesses that never grow?
melting ice cube or out of business.
When the economies of the world are okay, they can survive. It's the next two recessions that will kill them.
Why?
Because demand goes down for autos roughly 30 to 40% in a recession. And that's when you lose the ability to have free cash flow and reinvest. And if you're having to reinvest for EVs, you lose all that cash flow. So you slowly slip away.
Nick, a normal industry would consolidate given this picture and given these multiples. Not that it would necessarily save them, because we've seen that with the airlines, we've seen that with steel companies, but like these companies seem to be like very fiercely their own brand, their own world. It doesn't seem like any of them would really have that. Like, I'm just going down the list. Stellantis is a bunch of mergers, so put that one aside. Nobody's buying Ferrari. Ferrari, by the way, the stock is fine. I almost would argue it's a luxury good.
It is.
It doesn't even belong in this.
Yeah.
Okay. Honda, Volkswagen, BMW, Mercedes, Porsche. These are, I don't know, 75 to 100-year-old brands. They're not doing deals with each other to survive. They don't look at the situation they're in as a survival situation.
Yeah.
Is that just because it's too early for them to even be able to understand what's happening to them?
I think they all feel they would need to try. They had to try. And particularly like Ford. Ford is still family controlled.
Yeah.
And the family wants to have that brand. Look, GM had the wisdom to sell their European operations years ago. Ford still runs Ford of Europe because the family doesn't want to let go of the franchise in Europe. Okay. So there is a lot of tension there.
The Japanese companies don't come here and acquire U.S. automakers. They just sell autos.
Right.
That's all they need to do. Like, you're not going to have that kind of cross-border thing to the extent that you would expect in this industry environment.
And to your point, culture is a huge point. Like, one of the last things I did at First Boston was we were the advisor to Chrysler when they sold to Daimler.
Yeah.
And that was one of the worst mergers of all time.
I remember it was in 98?
Yeah.
I remember that.
One of the worst mergers of all time, and the cultural differences between the two businesses were profound.
It's like Lee Iacocca, Chrysler.
Yeah, it was. Yeah, Bob Eaton was the chairman at the time, but he'd taken over from Lee.
But it was Lee. But it was like Lee's culture that he had built.
It was Lutz's culture, really.
Yeah,
This hard driving car guy. Do the right thing, advertise, market the hell out of everything.
Yeah.
Versus Daimler, which is we make the best cars in the world.
Yeah.
And that just never worked. And it was so obvious from day one, and it never got better.
Nick, traditional value investors look at that chart that Drew just threw up, and they can't understand in what world this makes sense. You obviously have a background in automotive, so you understand where this is. Do you think that most auto analysts would agree with you, or would they agree with the value investors, or is it somewhere in between?
I think they would want to agree with the value investors because the stocks are cheap. And there is a pathway, which I think you outlined, where the world can reassemble itself so that some of these companies can survive and create shareholder value. But because of those limitations you talked about, cultural, technological, the chances are very unlikely.
I want to ask you, I remember 5 years ago, the knock on Tesla was that you don't understand how hard it is to manufacture cars at scale. They've never done it. This is the PayPal guy. He's never built shit at scale. He has no idea how to do it. And that's why GM and Ford are going to be the winners of the electric revolution, because they might be late to the game, but they know how to make a ton of cars and sell a lot of cars. That narrative during the pandemic went out the window. Elon out-executed. Like, say whatever you want about him and his tweeting, or I don't care about any of that stuff. He did figure out how to be a really good car manufacturer, and he did that better than the incumbent automakers figured out how to be as revolutionary as he is. In other words, he did a very hard thing that nobody thought he could do. And for me, that's when the narrative on Tesla changed on a dime. It's what a lot of the shorts weren't counting on. He started shipping a lot of cars. I remember he did an interview with Kara Swisher after he had spent like 3 months sleeping in the manufacturing facility. And maybe some of that was played up, but the guy figured out how to make and sell a lot of cars.
Yeah.
And so once he was able to do that, then the incumbent's advantage of, for decades, we've been producing millions of cars, that was gone. So then what was their advantage? I feel like that was the moment where the writing was on the wall.
You're right. And yes, you're right. The challenge, like you go through an auto plant, and just like the paint booth, a paint booth is $1 billion of CapEx. Like there's no room for error. You have to get that right.
What's a paint booth?
The paint booth is where a raw car in steel goes through and gets painted. And it's an incredibly complex process. And it's because of emissions and regulations, it's also a very expensive process. And getting it right, you can notice like Tesla doesn't have that many colors in their portfolio. There's a reason for that. It's a very complex process.
Ah, interesting.
So even just that, and you're right, to produce at scale is tremendously hard.
Yeah.
And he did it.
They didn't think he would be able to teach himself to lead the firm to be able to do it.
I didn't think he could do it.
Well, most people didn't. Okay.
Yeah.
That's what the hardcore car guys got mostly wrong, that somebody could come out of nowhere and actually produce enough cars to sustain the business.
Yeah.
Like nobody said that he couldn't design a great car, but like it was obvious that
They
he
didn't
could.
think he could deliver enough.
That's right.
Yeah.
Okay, so that was the big change.
Remember, for a time, they were making cars in tents,
Yes.
right? In
Whatever
a
it
tent,
took.
like a massive tent.
Yeah.
And it worked out all right.
It's pretty crazy.
And the odds
It
were
was
against
amazing.
him. It's pretty incredible.
Now that he had a chance to listen to what Nick had to say about the auto sector, what did we take away from his interview? I think the takeaway is that there are Wall Street types that see what you and I see, what a Tesla hyperbull already sees. That Tesla is on the right path, making the right, albeit controversial moves, even to the extent that Tesla and one other auto manufacturer will be the only ones to make it to the next stage of transportation, autonomy. Though our Tesla hypers might disagree with the time frame of when legacy auto dies off, Nick sees their end in 2 decades. Ford and GM, they're trading at low ratios, and I think that's an admittance by the street that their businesses have a survivability problem, and that is in the face of these companies printing billions of dollars in not just revenue, but actual income. Thanks for listening, and if you want to hear more from Nick, he has an online presence. He has 2 episodes with The Compound and Friends, and you can find The Compound on YouTube, and their podcast is on all the relevant podcast sites and apps.